Hi guys, welcome to the webinar. This is day 3 of our 4-day live training session. My name is Mark Shaws, I'm the pattern trader. Please put your name and where you're from in the question box and we'll be starting this momentarily. So we've had many hundreds on these webinars, so I'd like to call out everybody individually, but it would just take a lot of time. But I really want to thank you guys for your commitment to yourselves and for your support and loyalty to the pattern trader. So thanks everybody. We'll be starting in just a few minutes. Typically allow about 5 minutes for these registrations to get started. Thank you, Zachary. So welcome everybody. I'm going to get started in a few minutes. If you're just checking in, please put your name and where you're from in the question box. I always love to find out where everybody's coming from. Thanks, Victor. Good on you, Emilio. Yeah, I concur. Silver looks like it's going to get stronger. So we have people from all over the world: Singapore, Scotland, Michigan, Canada, Seattle, New Zealand, Australia, UK, Malaysia. So just a ton of people from all over the world. Zimbabwe, and somewhat north of where I used to live. I may not sound like it, but I'm a former South African myself. So Kay, thank you for that. So a lot of you are asking about a doctor's appointment that I alluded to. Yeah, it was just a checkoff for a date with the surgeon next week, which I'm not looking forward to, but such is life. But thank you for all your well wishes and appreciate it. So I'll give this another few minutes. If you haven't already done so, please put your name and where you're from in the question box and we'll kick this off. So again, this is just designed to be a fairly informal give and take. I'll take a lot of your questions at the end. What I'm just trying to share with you is my process, how I kind of look at the chart setups every day to try and assess, good risk reward opportunities across all financial markets. So I look at stocks, FX. I was a commodities broker, so I used to trade exotic things like orange juice futures and pork bellies and live hogs. So I've traded just about every financial instrument under the sun. And it really kind of boils down to familiar setup, whether it be, something is in a existing trend, like the US stock market, or there are certain patterns that indicate a change or direction of trend. And then I try and boil it down to, where to hop in that trend or chart pattern based on, certain price action. Thank you, Ian. Connor, thanks. Wow, Mike said I went through 13 surgeries in less than a year at the age of 22. I guess that puts things in perspective. So Peter says, how do you know which stock or Forex pair to trade out of so many? And I think that's why I gravitated to the FX market because, there's a universe of 10,000 stocks and there are filters where you could get filters that, look for double bottoms and double tops and all kinds of things. I try and just, look at different sectors, look at different stocks and sectors. Is pretty random because there's so many. I found a little penny stock the other day. It was trading at $1.70, and now the stock's at $4.50. I told a lot of you guys about it. Ticker symbol IZEA. So basically, but there's about 25 liquid currency pairs. And basically, I just go down the list, and I can go through this list in a few minutes because basically I know what I'm looking for. Something speaks to me or it doesn't. Really, what I try and do is reject a lot of trades and only find one or two good trades for the next session. Many times, there are no trades. So case is, how do you make a filter in stocks? But there are many stocks filtering systems that you could use. Public, so I just kind of look at what are the most active, and focus on a few. As I shared with you, I've been looking really at Beyond Meat. I think that there's a really good opportunity there. We'll talk about that. So I guess we can get started. So welcome to day 3 of the 4-day live trade execution training sessions. My name again is Mark Shaws, and the Pattern Trader. As I was saying that I look at all markets purely based on price action. So this is called technical analysis, which is different than fundamental analysis. Fundamental analysts, are employed by Wall Street, and they look at balance sheets and price earnings ratios and all kinds of what we call fundamental information. So I try and drown out the news. To me, the market is the news. The market is ahead of the news. I think I shared with you my emails at the height of the pandemic in March, where the US dollar right up here was rushing to all-time highs. And at that point, I was warning our members that this was bumping up against a long-term downtrend and don't chase these highs. And you can see that it's gone considerably lower, since then. So now this was at the height of the pandemic. How would I, how in the world would I know that, we would have such a dramatic turn? I'm not privy to any central bank information or anything of that nature. So to me, price is the news. Price puts on certain formations and certain patterns, and from those patterns, we can deduce where the direction is going to be. So we had this huge prominent double top resistance level. And then more recently, we've had this inverted head and shoulders. So this is the dollar index. The dollar index tracks or correlates the US dollar versus half a dozen of the most major currency pairs. And so it's kind of a proxy for, what's going on with the dollar. And, I've been alerting our members to the fact that, we've had this head and shoulders. So it looks just like a man or woman's left shoulder. The peak is the head. This is the right shoulder. And it's all connected by this neckline. A neckline is simply a line that's drawn through the entirety of the pattern. And you can see that this is a drooping neckline, which makes this even more bearish than it would be if it was horizontal. But either way, the implications of a head and shoulders price pattern, which let me just kind of draw that away from the confusions if you guys don't understand technical analysis. So it looks just like a man or woman's head and shoulder. And this is what a traditional head and shoulders would look like, where the neckline is horizontal because both of the shoulders are in symmetrical proportion. But you can see that in this case, the right shoulder is sitting below the left shoulder, and it creates this down sloping or drooping neckline. And to me, the implications of this drooping neckline mean that not only is this a bearish price pattern, but the implication is that this is going to go through like a knife through butter. This thing is just going to fall out of bed. And you can see that this week we have this kind of reversal where early in the week we went higher. It's got one more session to go for the rest of the week, but we're looking like we're closing at the bottom of this trading range in the US dollar. And, looks like we're, going to keep going lower until we reach somewhere near this threshold, which is the next major support area. And even if we get a bounce from here, I don't expect those bounces to last much. And that's what I expect long-term to see in the US dollar. So if you understand that, if you understand what this is informing you, then you can set up your trades, and you can also understand why you're in that trade. So that, if you're, long the Australian dollar versus the US dollar, and it comes back on you 80 or 100 pips, instead of getting out, you should be licking your chops that that's just an opportunity to buy more. This is the Australian versus the US. I've been saying to our members, this is probably the best risk reward trade against the US dollar. And this has just got an upside down version of what we saw in the dollar index, which makes sense, because if we think the dollar index is going to go lower, then it stands to reason that the Australian dollar versus the US dollar is going to go higher. So if we expect the US dollar to go lower, then we expect the Australian dollar versus the US dollar to go higher. So trading is done in pairs. It's kind of a seesaw. So if one side's going down, the other side's going up. And so this is what we see. We see an upside down version of what we saw in the dollar index, which makes sense because, so this is just an inverted head and shoulders. And as with the dollar index that had a drooping neckline, here you have an upsloping neckline. And the implications are very, very bullish. So now you have this inverted head and shoulders, you have this upsloping neckline, and so this is what we're going to see. So if we meet again in 3 months or 6 months, I'm not going to be shocked when this thing's trading at 85 and then 95 and then in 12 months, 107. So to me, price is the news. I don't know what news is going to come out in the next 2 weeks or 3 months, or what Janet Yellen's going to say at her next, FOMC meeting. But the market is telling me where it wants to go. So I look at a combination of patterns and price action. And what I mean by price action is, you can see in this week, just like the opposite of the dollar index, where this week we made a new low and it looks like we're closing on the high. So I call these bars reversals or key reversals. And the bigger the reversal, the more indicative that is likely going to be. And so what I mean by reversal, in this case, this could be a daily bar, a weekly bar, a monthly bar, but in this case, it went, made a low and then closed closer to the high than it did the low. Now we can also have a key reversal the other way. So I call these my insurance day bars, because when we see a reversal bar like this, pretty well underpinned that all these people this week took the risk, and that's your risk. So you can see that, this tried to go lower, try to press lower early in the week, and then close on the high. And that kind of underpins our risk. So I can get into markets knowing where my risk is. So to me, this is the holy grail of trading, where you understand, where to get in to catch the next momentum, and also where your risk is. And I think you would agree if I told you, that I had a trade where I kind of understood where to kind of catch a ride on the bus, and also know where to hop off if that bus is not going to get to my destination. And that's the holy grail. That's about as close as you're going to get to the holy grail of trading. There are no guarantees. But, as I've shown you, what I try and do is I identify what I call governing price patterns. And to my mind, this is going to govern or dictate the price days, weeks, months, and years from now. So that when we see it up here, there'll be 1,000 news broadcasts in between now and then, 1,000 reasons why, some analyst said it went up today or went down or whatnot. But this is what the whole story is. Price is the news. Price is a discounting effect. So when the Australian dollar is up, at, you know, close to parity a year from now, you know, this would have been the guiding pattern. So to my mind, it's, you know, it's just like anything else. It's boiling it down to, you know, the most simplest thing. I mean, you know, and again, this is in contrast to what most people do, which they look at a 15-minute chart. And so, you know, my contention is that the market can go anywhere in 15 minutes. And this really doesn't inform us, you know, of anything. But if you look at the long-term patterns, you know, for instance, if you saw this double top right here, consistent in this long-term downtrend, and got short right at the breach of this neckline at 76, you had a 2,200 pip ride on that trade. So that pattern within the long-term downtrend was telling us, you know, how the market was going to perform after it was consummated. But that was then, and this is now. So we, you know, went through the pandemic, we dropped through these major support levels, and then created this, you know, giant bear trap for anybody chasing those lows. So you can see that we went lower as projected by the long-term trend, but you can see once it hopped aboard this neckline, came back into the trend above 68, the trend now has changed. So what was a long-term 10-year downtrend in the Australian dollar is now in the throes of turning around and will likely be a multi-year uptrend, where I think you'll see the Australian dollar 1-to-1 with the US dollar at some point, and probably higher. So that's what I look at. Big picture, big patterns to put me in the direction of the trend. Once I identify the pattern, then I look for the price action. So, you know, you could basically, and then I layer it with an execution strategy where, you know, if you were looking to hop aboard this Australian, I would put a buy stop somewhere above the weekly high and require the market to confirm what you're looking at by running into your order. So we are kind of getting close to that support area in the dollar index, which coincides right around here. So I think we've got about another couple hundred pips till about the 80 level until we hit the next level of resistance, in which case I would imagine that we'll spend a little time doing this and then doing that. But, you know, at any time this, you know, this thing meaningfully sells off, instead of jumping out, I would keep on consolidating long positions and having a long view, because in my mind, the US dollar unambiguously looks like it's going to sell off over time. So, sorry, I'm not quite sure what happened there. Before I kind of, you know, get going, are there any questions that you guys had from the last couple of sessions? You know, maybe I'll, you know, take some questions and then plod forward. So Eric says entry is always the issue. So, you know, really, perfection is the enemy of the good, Eric. So I think what, you know, has occurred is that you guys are looking for perfect entries. And if you, you know, have a 0.5% risk on, so Eric says, I was just going to say that, is if you have a 0.5% risk on something, then each entry shouldn't be more important than the last. But if you're trying to, you know, swing for the fences on every trade, take 5 or 10% risk and, you know, hoping that trade's going to bail you out, then, you know, entry becomes, you know, a function. Whereas to my mind, you know, it, you know, just look at the picture and make your entry, and you should be completely objective about it. You should be able to walk away and not think a lick about it. So this is a stock that I had let's see if I can blow this up. This may be a little bit light on your end. Let's see if I can blow it up. So hopefully that doesn't look too dull to you. So this is a stock called Beyond Meat, BYND. I had a sell in this yesterday. I advised our members to put a sell stop just under the low here at 134.20. It closed just a tick above there at 134.60, but in the aftermarket, it's 60 cents lower, trading around 134. But that's neither here nor there. So again, what I try and do is look at the big picture and then make the appropriate risk reward trade and then walk away from it, right? So Eric, it shouldn't be this momentous thing where you're putting all your chips on the table and you've got to tear your hair out on any given trade. But this is a trade that I like from a number of standpoints on the bear side. So to me, this looks like kind of a double top. It's a funky looking. The tops don't have to be symmetrical. You can see that one is higher than the other. But when you look back, this looks like an M top or a double top. Either way, this is a reversal where this market came higher, and this is a reversal, which to my mind is indicating or pointing that the market is going to go lower. Now, in addition to this M or double top, I also see this head and shoulders. So it looks just like that man or woman's head and shoulders that we see in the dollar index. And where we saw the dollar index crash, I expect that Beyond Meat will be the same. Now, if you're really cautious and you want to wait, you could wait for this thing to crack the neckline at 135. I'm sorry, 115. Frankly, I got short this today. I got short on the opening. It opened a few pips higher, a few dollars higher rather, and I shorted right into the opening here at 135.60. And I've just got $1 in here. I also bought the put options. So I bought the 130 puts expiring the end of next week. I bought them for about $2.20. I don't want to get into a lengthy thing on put, options. Options, first off, are the riskiest thing you can do. You can lose 100% of whatever you put up. So if you're going to do this, it's on you. And so basically when you're buying, a 130 put for $2, that means this thing has to go to 128 for you to break even. So this thing has to go down $6 by next week just for me to break even. So that's why these are such risky endeavors. But I'm making a calculated bet that this was a kind of a fake out, this bounce, this whole bounce from this neckline here. I think this is what I call a dead cat bounce. And you can see since making that high 5 trading days ago, you can see every day we've had a lower high. So, it's starting to lose steam. And, I expect this thing, to roll over and, roll over pretty quickly and go back in the direction as projected by the big picture double top head and shoulders. Now, I also kind of call this an inside bar coil because you can see that all of these 4 days, the daily ranges from high to low, all of those ranges sit within the range 5 days ago. So you have this coil, and to me, this coil, it's like kind of a beach ball where you hold it underwater, you press it, you press it, you press it, and then you let your hand go. What happened? It just explodes, and the energy just the ball just pops right out of the water. And this is what this coil represents, is that this is building energy, and that energy is going to be released one way or another. And I'm hypothesizing that the release of energy is going to be this way by virtue of the prior patterns. So whenever I look at my inside bars or narrow range bars or inside day bars, whatever you want to call it, I look at the prior direction or trend or pattern, right? So key reversal just in and of itself you know, is not that, you know, you just can't fire key reversals. You've got to look at where this thing is coming from. But having said that, if you look at this key reversal here, made a new high, closed on the low, these things kind of stand out. And, you know, these kind of guys kind of point in the direction that the market wants to go. Sometimes it just takes a long time for the market to go where the market is actually pointing. And that's why, you know, I like looking as long a term history as I can, because something, you know, 3 months ago or 5 years ago, you know, is pointing in the direction that this thing, you know, wants to go. And so, full disclosure, I am short the stock. I am long the put options of Beyond Meat because I am very bearish this particular stock because of this Head and Shoulders. And so, again, this would be the final dagger. If it crossed this neckline here at 115, then I could hypothesize we're going a lot lower. And, you know, you can even measure these things by measuring the top to the neckline. So that's about 115 to about 195. That's about 80 bucks. And let's say you just dropped, you know, 75% of that 80 or $60 from 120. That means you're going back to 60 bucks in this stock. And that's a big call right now, but I wouldn't be surprised. So we shall see, said the blind man. But I am short this stock. I bought a put option, Max. So I bought a put option and I'm short the stock. So I think you had that backwards. So I am very bearish this. So yeah, I'm not short the put options, Dave. So I am long the puts and short the stock. So it's a double bet. You know, I just gone a little nuts. So sometimes when I see something, I just lay into it. Okay, so a lot of people, I might have said that. So I might have created the confusion, in which case it's on me, and I apologize for that. Another stock that I've been looking at, I'm still kind of, you know, thinking that it has interesting possibilities. Let me just pull this up. Let me just pull up a longer term thing. I think I spoke about this earlier in the week. It's kind of been dancing around and consolidating. It's had a huge up move. So doesn't surprise me. But again, what I'm trying to do is look at the underlying patterns. And so when it kind of messes around today, the stock sold off about 80 cents before it got going and went, you know, the other way and closed, you know, fairly okay. But this is KTOS, which looks a lot like the spot silver chart. And what I was kind of zooming in right here in this narrow time frame is this upside down inverted Head and Shoulders, just like we see in the Australian dollar against the US dollar and a lot of things. So, you know, you can see these patterns in all kinds of trading instruments, and they mean the same thing. And a couple of weeks ago, we had a breakout above this Head and Shoulders pattern at about 25 bucks. And, you know, you can see that we're just getting going right now around $29. So let me just show you what happened today. We got a bit of a key reversal, slight. It's going to be interesting to see how we, if we follow through tomorrow. But I bought the shares. I'm long this stock. I bought it right in here. So neither. Let's see if this is too big. Okay, it's a little bit big. So this is, you know, KTOS, and you can see, you know, following the breakout that we saw in that long-term chart, that we've just, continue to go higher. We've got this trend line that could continue to pull back to this trend line. Today we had a little bit of a pullback earlier in the day, and then we closed somewhat positive, nothing great, a little bit unchanged. So we had a mini key reversal here where it made a new low. Made a new low. Looks like it closed closer to the high. And let's see if this, it still may need to settle out here. This stock has had a huge move from 21 to 31. You may need to pull back here before you get the next move. But I'm looking at the long-term pattern, and right now I am long the stock, and we'll see what happens there. Another thing that I was talking about was the euro versus the Japanese yen. I advise our members to get out of their short positions. I was kind of ambivalent about what's going on with the euro versus the yen. But I think that these yen pairs look like they're actually going to go higher. They're in long-term downtrends. I wasn't sure if the trend was going to, peter out, but I actually made a lot of money. I wonder if I could find that chart, because that would be interesting. I didn't think about it. Sorry, let me see if I can really find something really quick. Yeah, here it is. Okay, so this is going to be an interesting analogy. So I made a ton of money a couple of years ago, and we're looking like we're seeing the same thing in the euro versus the yen. So ironically, when I first started a pattern trader in 2015, I noticed this pattern in the NASDAQ, which was, a third of where it is now. We had this reverse triangle, and right at the top, I said that, we were going to fall out of bed from here. I actually measured, so let me just get out of this for a second. So I measured the top of this triangle to the bottom and projected that this thing would fall to 39. And it fell to 39.02. And and because this reverse triangle, this is not a reversal pattern. So yes, it's a pattern that you had some movement out of here. You could have played this for a little bit, but it's not a reversal of an entire huge bull market. So based on that, I predicted it would fall there, and then you could see it quickly put a double bottom, and then within the double bottom, we had this price action where it made a new low, closed on the high, made a new low, closed on the high, and then when it made a new high. So I saw that about 5 years ago. So about 2 years ago, I saw the same thing shaping up on Facebook. So you can see here was Facebook. This was back in 2018. It, hit the high of 195. It dropped out of this reverse triangle just as it did in the NASDAQ. Put a double bottom on. I bought a whole bunch of shares right here, about 150. Rode it to about 165. I still remember this trade. Made a few $100 grand on that move. Got out of it there, and then it peeled back. Made a little low here, and then closed on the high of the day, this key reversal bar right here, where it made a new low and closed on the high. And so it was around 160. So it was at that time that I was saying that based on what I'd seen in the NASDAQ and the price action, this is looking exactly the same. And because the NASDAQ went to make a new high, I projected that this would too. And so I just went nuts and started buying heavily out of the money calls. Like, $25 higher. I was buying the 185 calls, I remember, for 30 cents. And I started buying the 180, the 182.5, 185, but you can see it was way above where it was. So, I mean, that is a huge bet. And if even if this thing went up $10, I needed this thing to go up $25 or $30 to make that bet good. And based on the prior price action of how, this thing went and made a new high, I was betting it was going to do the same thing. And the euro yen kind of looks like it's doing the same thing. So I bet a whole bunch of, I bought the stock there. I got out here. I bought the 180, 182.5, 185 things and made just a ton of dough, on this move, over $500,000 actually, buying these 180 calls, 182.5, 185s, and made a ton of dough. But the euro yen kind of looks like it's doing the same thing. So this is the beauty of, repeat price behavior. And, this is what I try and do at the Pattern Trader, is try and introduce you to patterns and price action so that when you see these things for yourself, you'll know what to do. So, let's see if this doesn't look a little bit similar. You have the reverse triangle, you fall out of bed, you put on this, double bottom here. And so this is probably where you're likely to go. So yeah, I would buy the euro yen. So I advised our, members to get out and pretty cool. You guys have any comments on that? Yeah, Graham, I would buy it now. So yeah, today's also an inside bar. So you've kind of got a breakout of an inside bar too. So you kind of have the double bottom and you have the inside bar and you've broken out above the inside bar. So yeah, I would buy this. And I could well expect that we're going to make another move higher to the long-term price resistance around 132, which is kind of where, I was thinking it was going to go for quite some time. So you can see that this is a long-term monthly chart. And the resistance comes in around 132. Actually, we're right. No, this isn't the month. Let me just peel out of this. Here we go. So yeah, I think that, we've got a little bit of distance to run, around 130 or so, before we hit this next resistance pocket. And then I'd kind of watch out right around there. But, this could be something where, we break out, and this could be kind of a long-term paradigm shift. So this is what I've been watching in these yen pairs. I know that something is going to happen, and that something means that we'll make a lot of money. The question is, what is that something? So you can see that we're kind of trading in this symmetrical triangle, and we could continue to work back and forth till one thing or another happens. Now, this is a monthly chart. Each one of these price bars takes 1 month to form. So I've been kind of, staring at these euro yen and these yen charts, and it just feels like there's still momentum to the upside before it hits an air pocket and goes the other way. Nat says, can you expand on what a reverse triangle is? So a reverse triangle is this. So this would be a kind of a descending triangle, and then that is a reverse triangle. LC, I'll go ahead and do that, but thanks for pointing that out. So Kishore says that is an awesome pattern. So I made, yeah, $500,000 just on understanding, how that plays out. And it was exact mirror, of what I saw in the NASDAQ. And when I launched the Pattern Trader in September 2015, that was one of the first patterns that I analyzed. And for some reason, it remained frozen in my brain. And this is to me the benefit of, keeping a daily journal, is that you have an archive of how these patterns, look and work out, so that when you want to, reference how something worked out in a prior time frame, you can do so. And sometimes it's worth the effort. So Roger says, between the Euro Yen and the Euro USD, which is the better bet? Look, I think the dollar is going to, weaken, which means the euro is probably going to go higher. I would rather be long the Australian than the euro, but it all looks, very bullish. So you can see that the euro also has the same thing as the Australian, the same thing that we saw in stock of KTOS. You see this, very familiar. It stakes itself out in different ways, but you have this head and shoulders with kind of a horizontal neckline. But either way, this is bullish, and now you have this key reversal price action where you made a new low, close on the high, and it looks like it's pointing north. There's, some price resistance here. That's why I like Australian US. It doesn't have that resistance. But whatever currency you want, if you have a long-term view, the dollar looks like it's going to weaken. You can see we have a significant resistance level in the euro. This is where that resistance would likely come in on the dollar index, around 125. And I would expect a little turbulence around there. But again, long-term, that's where we're headed. Nat says, so is a reverse triangle a continuation pattern or a reversal pattern? So it's more of a continuation pattern. But what I do is I look at how structures play within the pattern. So sometimes you'll get a pattern and it'll look like something. And so this is where you have to kind of defer to the market. Whereas this is the New Zealand dollar, Canadian dollar. Let me actually put some more history here so we can. So this is, again, a departure of what you would see in a textbook and what we see in real life. And at the end of the day, the markets are always right. Your analysis is subjective, but the markets are the only thing that count. And so what I'm referring to here is, here you have a classic double top. You also have a complex head and shoulders. And then you have a neckline running through all of that right around here. So that you could well imagine that after years and years of forming this double top head and shoulders, that when it crashed through the neckline, this should have been it. This is what we should have seen. If, we had this huge bear price pattern sitting on top of this neckline, once it crashed, then the market should have gone in that way. But you can see that it just created this bear trap where if you chase this in breakout, it was very quickly above the neckline, and now it's gone the other way. So I call this a busted price pattern, because the implications of this price pattern are no longer in force and effect. And now we have a new price pattern that is governing or dictating the price behavior. So, there is no, whether a reverse triangle is a reversal price pattern or continuation, the market tells you that. And so this is the most important thing that I think I learned, in 40 years, because I used to see this in the textbook and say, okay, this has got to go down. And when it kind of slowly went up, I used to fight it and say, okay, I'm just going to short more and then short more, and and then get stuck and lose a ton of dough. And so now I just look at how the market responds to the structure. And when a market doesn't respond to something, to me, that in and of itself just invites an equal and opposite reaction. And so this is now, the new pattern where you have this double bottom. And now, because this is a busted price pattern, I can well expect New Zealand dollar Canadian is going to go higher. And if you think it's going to go higher, here's your continuation bar. Made a new low, closed on the high. It's pointing in the direction that this thing wants to get going. So Graham says, I hear that you should see 2 opens and 2 closes below the neckline before acting. And yeah, maybe, I don't listen to any rule. I just respond to what the market is telling me, right? And if the market doesn't, respond to my structure, then, you can't just fight it because you think, and that's what happens. We all try and we have an opinion, and then we try and force the market into the way we see things. And so what I try and do is be completely clear and objective. I draw my structure around prices, and then I see where it goes and how it responds. We talked about the pound New Zealand. I said that I've got a feeling that we could be seeing a double bottom, and right now it doesn't look that way. Looks like the market wants to go back in the direction it came from, but I'm open to checking it out. So this could be a double bottom. I said this isn't going to go straight up right away. It's going to mess around here. It could, come back down and do this, but I'm very free and open to the fact that we could go back in the direction of the main trend here. So this is where you draw your structure and you see how markets respond. So if this keeps falling, this is not going to support my hypothesis, anymore. The market is not going to support what I'm looking at. However, if tomorrow, we do something like this and, we start catching some support, then, so I just kind of draw a structure. I could make the case for pound New Zealand going either way right now. And then you see how the market responds. So some patterns lend themselves much more to a clearer objective than others. Sometimes I'm just dead to right, just dead certain about something. I hate being that way because, you feel like if you see something, then it just can't be right. But like Beyond, I just feel like it looks very bearish to me, but a friend of mine said it looks very bullish to him. So, that's what makes markets. And again, as Eric or somebody said, about, trouble with entries is that it's not about entry. It's about setting up your risk reward trades. And even if you don't have to be right on every trade. I can be wrong of 5 out of 6 trades and very often am, but it's that one trade, like Beyond, where I'll load up, and if it goes my way, I'm going to make a lot of money, as I did with that Facebook bet, where I made $500,000 in 3 weeks, on something that I saw 3 years later, or 3 years earlier. So, sometimes it takes 3 years to see something that, you make $500,000 in. So it's not all about entry. It's about risk and reward and waiting for your opportunity. So I always make the metaphor, you'll often see those surfers out in the ocean at 5 in the morning. And when the water looks like a lake, why are they out there? Well, they're just waiting for that one ride that's going to take them to the beach. And trading's the same way. Sometimes you have to wait through weeks and months to see something that comes your way, and then you ride that, to the beach and make all your money in that trade. So, that's a little bit different than what you're normally exposed to in this industry, where everybody's showing you how to make 5 trades a day and, pick out 7 trade pips here and 15 pips here on some magic moving average crossover. That's not what I do. I'm looking for the big moves, where I'm looking for 500 pips, 800 pips, 1,000 pips on a trade. If Beyond, goes from 135 to $60, that's where I'll make, all of my money. And, I may or may not make on this pound New Zealand trade. I am still long this pound New Zealand trade. Mustafa wants to see, so I did send out a trade today in silver. Silver kind of looks like, what KTOS looks like, where it has a long-term basing out and then it broke out. So maybe I should reference that. So this is the chart, the long-term chart of XAG USD. It's a ticker symbol for spot silver. And if you remember the chart of KTOS that I flashed at the beginning, the stock looks awfully the same, where you had a double top right here in this time frame. Then you had this descending triangle right here. Sorry, I picked the wrong color. Let me try and get a little darker color here. So these descending triangles to me are usually, bear price patterns. And once you broke the neckline of this descending triangle from $26 is always all the way down to $11. So this bear price pattern pointed in the direction this market was going for 7 years. And then you had kind of this, 7-year back and forth. You had kind of another triangle below this other one where you had kind of this 7-year descending triangle. You had this bear trap here where all the bears that chased these lows under $14, that was the low for many years. If you didn't get out very quickly, it reversed on you very quickly. So you had the bear trap, and then you had this inverted head and shoulders. So you just see this inverted head and shoulders now on so many patterns that we've looked at. The stock of KTOS, this, Australian US. And so it was right here at the juncture of the 7-year breakout above the 7-year downtrend line and the neckline of this inverted head and shoulders that, I advised our members to get long around 18.5 and build a position here. And then you can see it almost doubled in price as it shot out of that neckline. And now it's kind of been in this, multi-month consolidation. But after breaking out, you can see we put this double bottom, and you can see again, I look within the pattern and look at the price action, made a new low, close at the high. And then you can see the same thing is occurring here this week. So people very often ask, why don't I trade candlesticks? It's because, I don't know about you guys, but I see these reversals very clearly. When I see something like this, it just points to me. It stakes itself out. It shows itself very visually. And so the combination of the patterns, so the inverted head and shoulders, which is a bullish price pattern, the double bottom, which is a bullish price pattern, and now this price action in the form of this key reversal is all coming together, suggesting that silver is now collecting itself for the next move, which looks to be higher and perhaps considerably higher. So Eric says, I really wish I had your patience to hold on to trade. So really, I think it comes down to, what is your objective? And to me, I never understood, the Forex industry that is preoccupied with devising all these strategies to try and carve out, 10 pips here or 15 pips here or 20 pips here. If I see a move, that, over years is up here, it's like, I want this. I want that trade. I want to be in, I want to get in at, at 25 and, ride this thing to 50. It's like, I want to be part of that. It's just how I'm built. I just can't see the point if, something is showing itself. So I got long KTOS, and maybe the stock will be up, 50. Maybe it'll be one of these stocks that is at 100 next year, or maybe it'll just flame out. But, I start building a position, in the expectation that I want to, go on these big rides. I don't want to carve out 30 cents here and 50 pips there. So it's not even a question of patience. It's then waiting for the pattern. And then once you see the pattern kind of gives you the confidence. So people say, well, how can you sit in these trades for 3 months? What gives you the confidence? Well, the governing price pattern. You know, when I see Australian, US, you know, that inverted head and shoulders, that's not ambiguous to me. You know, these patterns mean something. You know, I showed you the pattern on, you know, how it, you know, broke out of the NASDAQ and did the same thing in Facebook. So that's the beauty of these patterns. They repeat. You know, a double top descending wedge pattern is very bearish. And so it was not surprising that after those patterns were formed that we had 7-year bear market. And now we've got a bullish price pattern here. And now we could have a multi-year, you know, bull market. Let's see, very keen to see. Okay, so Mustafa, that's kind of my thinking on silver there. It looks like it's putting on another, it almost looks like an inverted head and shoulders here. So anything above 28 is likely to find some fertile ground. All right. What else did we talk about this week? I'm just trying to find, like I said yesterday, I thought this new issue snow looked pretty bearish to me. Let me try and find it. Let me see if I can put it up in a different. So I just try and find patterns wherever they are that I can understand, and then I can set up a good risk reward bet. So let me see if I can just blow it up just a little bit. Okay, that looks good. So this is a new issue, ticker symbol SNOW. And again, you know, it's like I just wade through these charts and just look for things that stand out to me. And, you know, this really stands out to me. What stands out to me is this looks like a double top. And again, the tops don't have to be symmetrical. You don't have to have the highs or in the same area. But when I look back, this looks like an M, a reversal. Now, this doesn't have a lot of history. It doesn't matter. It's got enough history for me. And you can see we've got a little double top in this time frame. And then I look for a combination of both the pattern and then the price action within the pattern. So if I can see a pattern emerging, even before it starts, I will get short before it's even confirmed. Meaning that right here, you made a new high, you close on the low. You made a new high, you close on the low. So I would get short right there. I did. And then it made another peak here, made a new low, close on the high, and then I started shorting against this when it made a new high, close on the low. Right in here, I was shorting into that. And today you've got a little inside bar. And so tomorrow I would just put a sell stop right under these lows. It's around 281, 282. And so this is looking, very bearish, even though it's a new issue. The markets are still, very bullish. This thing is, starting to, look, I mean, we've got a bit of an ascending trend line. Maybe if it goes up tomorrow, it goes up, but that's the beauty of it. You could put a sell stop underneath here, and if it runs up, then no harm, no foul. But if it comes through there, my view is that it's got to retest, these lower 260s. So, I just look for certain shapes, and then I look, for certain price action that I can get in a trade. So when I see a reversal and then it opens higher in the next session, which this did, I kind of use this reversal high as my, risk parameter. So if I get short here, I've just got a small risk for a pretty good reward. And that's what I look to do. And so it was the same with Beyond today. Even though I told, I said put a sell stop at 134.20, when the thing opened a couple bucks higher, into what I thought was a sell, I just sold into that, counting that, it would just, die off of that. And so this is what I do all the time. I just look for patterns and price action and ways to set up, risk reward opportunities. So Atul, I use several brokers for my stocks. It doesn't matter as long as you have a regulated broker. So Bella says, you mentioned the yen pairs being bullish. Does that apply to dollar yen? No. I mean, look, dollar yen could, I mean, it's the velocity of going down has stalled, which always makes me pretty reticent. So let me, dollar yen long-term looks lower. And even these yen pairs look lower in long-term, but, I just feel like they may have, just one more move left in them. So you can see that this is dollar yen. And it's been kind of collecting on, you could call this a symmetrical triangle, maybe the bottom end. And, I did say that there are obstructions under this low. So you've had this low around 103, 104 for a long time. And you can see, that we're sneaking, but there's, these support areas right underneath here. So that's why I think it's just going to be tough slogging through here. But on the main, dollar yen looks, very bearish over time. I mean, could we have another retracement, back up here? Possibly. That's kind of what I see this thing doing. So these yen pairs have been kind of driving me crazy. I made a lot shorting dollar yen. Now obviously the velocity is, kind of getting more difficult. So this is the monthly chart of the dollar yen. You can see we're kind of looking like we're trying to make a minor reversal here. We'll see how we close out this month. But it still looks overall very difficult to make a bull case for this. But here's this symmetrical triangle that I'm looking at on the monthly. So we're right on this support level. So yeah, I would tread carefully here. You have kind of a trend line that's been controlling this. And so, yeah, you could have some kind of uncork out of here. But I do expect that the long-term trend will look something like that. But, we could have, there is some support here, obviously, that you can see. So it makes it very tough slogging to be short. So, I always refer to this as a rubber band effect, where, if you're looking to get short, you can see that this is kind of declined from like 112 without much of a let up. And what I like to see is like an elastic band where you pull it back for some energy so that it can release again in the direction. So you never see a market just go straight down and then straight down and then straight down. You want to see some kind of pullback so that it can build energy to go down again. So this, is a bit of it's running out of that energy, where it's like pushing on a string, where if you try and short it here, this has made a 1,000 pip move from here. So, it's just not a lot of percentage getting short here. I want to see some kind of pullback and then look to Byron says, to use different brokers for, I have so many brokers. I have my money spread all over the place, Byron. So Wahid says, what is a good put option for snow? So again, you have to make a determination of, in what period of time you think it's going to come down to what level, and then make a kind of determination if, you can see your way clear of that. So for instance, I bought these puts in, BYND, 130 puts, for $2, which is somewhat cheap, somewhat expensive. I mean, it's $6 away, but I've got about a week, 6 trading days to get there, and this thing, moves $6 a day. So, I don't want to really say a lot about. I buy puts and calls based on the underlying, how I feel about the underlying, and it's a very risky thing. I really don't want to, have you guys lose all of your money and then come looking for me. So, probably you should short the stock, just but so so this is basically, so Snow is trading at 286 SNO. So it's kind of a, so obviously you don't want to buy options for tomorrow, because you got one day. Sometimes, I'll do QQQs if I'm really sure. So this is the next month out. And so SNO is trading at, let's say 286. So then you come down here and you see what this looks like, and you can see how expensive this is. So this is why I wouldn't do it. So you can see the 285 puts for next week are trading at $10. So this means that this has to go to $275 for you to break even. Now, look, this thing goes down, $5, $10 a day. So it could very definitely do that. But see, this is just too expensive for me. So if I have to buy a put, if I have to buy an out of the money put, let's say the 280s for $8, that means this has to go to 272 for me to break even by the end of next week. Now, it's entirely possible that could happen, but that's just too expensive for me. It's just too big a bet, because if I'm getting an option, I want to make 3 times my money. If I'm gonna risk 100% of my money, I want to make at least 2 to 3 times. So now you have to say, in order to double this, if this has to go from 8 to 16, then this would have to be trading at 270 by the end of next week. SNOW. It's entirely possible it could, but that doesn't seem so good to me. You know, whereas I was buying those Facebook calls, granted, they were $20 out of the money, but I was buying them for 30 cents. And they went to $4.50. So I made 15 times my money. That's buying options, right? That's where you can get some leverage. But to buy something for $8 and hopefully you make 12, that's just too much. It's not a good enough risk reward. Whereas BYND, I bought these guys right here. So BYND is trading at call it 134.5. I bought the 130 puts right here for 220. And I guess they closed around 239. So that's not a bad bet. So now if you bought them here, you have to say that BYND, you know, has to close at 127.5 because you have to deduct this premium from your strike price to get your break even. So that to break even by the end of next week, this thing, BYND has to fall $7. So, you know, and obviously if you have a big move in between and you can get a, you know, move on the options, sometimes you'll just get out just to, you know, wipe your risk off the table. So Alex says, does dollar yen look like a bull flag? I don't think so. I think there's just so many things. So when I look at a pattern, I look at, okay, which are the more impactful bars within the pattern. You know, and I kind of see this reversal here, and I see the reversal here, and I see the reversals all here, whereas I don't see, you know, anything here. So I do think that this is going to break out long term that way. It just, you know, could take a while. So I would, you know, be looking to, you know, short any move up here long term. So Wahid says, does the VIX look like it's primed for a big move up? Not really. I kind of look at kind of a VIX trade. It's called the UVXY. This is kind of a, it's 1.5 times volatility. And, you know, I kind of monitor this to see the health of the, to determine when this bull market's going to run out of steam. And to my mind, this looks so bearish, which means that the market looks like it's still going to go higher. So you can see right here, and this is kind of an esoteric instrument, and I just look at it as another proxy on the market. So you can see that, you know, this double top head and shoulders here, you know, looks like this thing's about to puncture through. Now, you know, at some point you could kind of come through here and do one of these and you get a false breakout. And I would look for something like that. And so, you know, if we got some kind of reversal in this instrument, then it would suggest that the market is going to reverse lower. But right now, it looks like, you know, we still, you know, need to have one more push through here. So this looks so bearish. So the market still looks bullish. But as I said, it's not a stock market. It's a market of stocks. There's some, you know, stocks that I'm very bullish, like KTOS, and some that I'm more bearish, like BYND and SNO. So I don't really care. I just look for, you know, pattern and price action where I can set up a trade. Walter says, what about Australian dollar versus Japanese yen? So I like all these Australian dollar pairs higher. So you can see that the Australian dollar, whether it be Australian versus Canadian, Australian versus US, it all has this familiar head and inverted head and shoulders with the upsloping neckline, which is all implies that this thing is, you know, a green light on the upside. So you can see the inverted head and shoulders. You can see that we've had this upsloping neckline, and we've broken out above the neckline, and now you have this key reversal. You can see how these key reversals made a new low, closed in the high, made another move up, made a new low, closed in the high, made another move up. So the markets point in the direction they want to go in a combination of chart patterns and price action. And so this is where we're going. You know, I'd say the next resistance in this is about 84, about 300 some odd pips away. There is some resistance here, but it looks like we're going to clear through that. Wahid says you are the best. I don't know about that, Wahid. I just, you know, just punch it out every day. But the markets, they, you know, they basically tell you where they want to go. But if you're trading on the 15-minute pattern, then it all looks like a race car that is unpredictable, because it is. You know, if you're looking at this thing on a short-term duration, you may be able to detect some of the trend, but you can't if you don't have this historical. So if you look at something like this looks like a triple top to me. You know, I'd be looking to short this thing. Maybe I should. So that's the, you know, you need, you know, you need perspective. And, you know, you may use that 15-minute chart to carve out, you know, the next 15 pips, but, you know, that's not what I'm looking for. You know, I'm looking for, you know, thrusts that I can, you know, make some money on. I don't want to be in front of my screen all day long. I don't sit in front of my screen all day long. I put on my trades and that's it. Walk away. Kishore says, thank you for sharing your knowledge. You're welcome. So I think that's basically where I'll end it today. We'll have one more session tomorrow. It'll be an abbreviated session because I need to go to the airport. So, but we'll do another session tomorrow. I hope you've got a ton of value out of these sessions. Graham says, this is gold. I'd love to know your input, good, bad, or indifferent, you know, your reaction to these kind of teachings. Does this open your mind to something different? Do you think that this could make a difference in your trading? Instead of saying yes or no, just please put some elaborated comment. You know, I learn a lot from your comments, and then sometimes we post these reviews. And then if you're so inclined, we do have a review website that you can check out to see other people's experiences, as well as post your own experience. And again, I'm not looking for accolades. Anything you want to say, I will learn, and other people will learn from you. So I posted our review website in the chat box, and if you care to, please post your review there. And really appreciate it. So Adnan says you're like a super pro, so thank you for Adnan. Jennifer's heartfelt thanks and gratitude for your willingness to share such vast knowledge. You're welcome, Jennifer. You know, I get a lot of, you know, giving back. I started the Pattern Trader really to give back. I've been staring at these freaking screens for, you know, more time than I care to admit. I blew out so many accounts and went through the ups. I was always a good trader, but I was, you know, undisciplined, and I couldn't kind of find that, you know, that toolbox, you know, to kind of keep me on the straight and narrow. And then I kind of, you know, incrementally, you know, through my own, you know, fumbling around, but it turns out all of this is scientifically validated. We went back and found, you know, scientific studies that after you find inverted head and shoulders, it goes up for 100 days after that. The 35,000 tests to show that. So again, to my mind, I find the pattern, then I find the price action, and then I layer it with a, you know, execution strategy. And so it's a, you know, 3-4 step prong thing that puts me in the direction of a good trade and lets me understand where my risk is. So that's all we can really do every day, is try and hop on board the momentum in the right direction and also understand your risk. And if you can do that over time, you will win. But if you're just going to fire, at 15-minute charts for 7 pip, outcomes, it's not going to work out. So Leanne says, you have just given me the key to my own failures. I'm a good trader. I'm just undisciplined. So it's very easy. These markets hypnotize you. If you're in front of these trading screens and these lights are blinking and, everything's instantaneous and you can click a button, it gives us a rush. And, we've all been locked up and cooped up. And so who doesn't want, some kind of action in our lives? But, go and find action somewhere else. If you really want to make money, then, just be objective. And this is all you should be looking at. If you're cruising forums, if you're looking for, volume indicators, things here, if you're looking for Bollinger Bands, to kind of get you in and out, this is all you need is price and time. I can look at this chart and make a set of determinations. I think this is going to go up. So what I do is I draw this structure around price and say, this is what makes sense to me. This is what I can see. And then I set up my trade. But if the market starts, saying, hey, showing me something else, then and shows that it's busting my structure, like I showed you on New Zealand dollar Canadian, then, the red flares are going to go off, and, sometimes it'll just invite me to, take this in the other direction. So very often how the market responds around the breakout or around these structures will tell you everything. So if something's good, a market should go that way. If something, is stalled and fails and starts looking like it's, not, going according to that structure, then, look out for this key reversal and, take it in the next direction. So these markets move all over the place. And they do give you a kind of a heads up before they put on, the next major move. You just have to look at the signs. All right, guys, thanks a ton. I'll see you back at 5 p.m. For the last session tomorrow, 5 p.m. Eastern Standard Time. So thanks a ton, and I'll see you again tomorrow.